Hello everyone, this is the Abundance Oracle here on a very, very foggy day, as you can tell by what you can't see out of my windows at the beach. So I have 8 terms that when I speak to people, some of them are in investment banker language and people don't understand what they mean, and I'm going to lay this out in basic human being language. So the first one is income statement. And I'm going to read a little because I just put my notes down. So this is one of the 3 most important financial statements besides cash flow statement and balance sheet. And it's used for reporting a person or a company's financial health for a month or a year or a period of time. Okay, how it's calculated out, it's the revenue or how much money you make for a regular person. Revenue, they will call it if you own a company. Subtracting out minus the expenses that it takes. Or you could call it how much money you spend in regular person's lingo. And that equals the gain your corporation is making, gain or loss, or for a personal statement, it would be how much money is left over that you get to use, disposable income for savings, investment, wasting, whatever you're going to end up doing with it. So that's the money you make minus what it costs you to make that equals the profit or loss that you have at the end. Okay, are we all clear on that? If you have questions, just write it below. It's hard because you can't talk back and forth to one another. And the bank will ask you for that income statement, even if it's just on a rental property you own, if you want to go ahead and buy another one on that. Okay, now, bankruptcy. Bankruptcy, when your plan to make money doesn't work out, and you still owe money. In the USA, you can go to court and declare bankruptcy. This will wipe out the majority of what you owe. However, the big catch here is that it stays on your record for 7 years and it ruins your credit score, which will really really make it hard for you to get another loan. So you want to try and avoid that if at all possible. Okay, the bank or financial institution will look at your FICO score, which is your credit score. This score is available to financial institutions to determine how good you are at paying your bills and how reliable you are. It will allow people or banks to learn how likely you are to pay them back if they lend you money. The higher your credit score, I think 850 is the highest. I know don't have perfect because I think I'm 840, but I think 850 is feasible. The higher the score, the more likely you are to get the loan and the more likely you are to get a lower interest rate because you're less of a risk to lend money to. Okay, the next one, I'm trying to go as fast as I can, everyone. Balance sheet. Okay, balance sheet is for a specific period of time. For example, monthly or annual. A lot of people do an annual balance sheet, or depending upon what your bank wants for your loan, they'll ask you for a balance sheet. It shows your total assets, or another way to say it, it shows all the stuff you own minus any mortgages or loans, which will be equal to what you get to keep. So it's sort of like an income statement, but it's about the stuff, not the money you're earning. Okay, next one, asset. What is an actual asset? An asset is something you own or intend to fully own after you pay back the money you borrowed to buy it. For example, bulldozer because you have a construction company, or if you're an individual, maybe a house because you most likely will borrow money for a house. Some people don't pay cash for a car. They take loans out for cars. So remember, an asset is not yours until you fully pay back the money you borrowed and the interest that they charged you, until that is totally paid off. In the United States, if you haven't paid it off, technically it's not yours, even though on a personal side, most people consider the car theirs or the house theirs, even though they have still payments out to a bank or a mortgage company. Okay, next one, acquisition. Acquisition is a fancy name or institutional name, a financial name for the same thing as buying something. All these words get more and more complex because then you think you need a financial planner or advisor, and people make money off of regular, normal people not knowing what they're talking about, which is, I think, not good. So you need to learn these words. Okay, gross income. The total amount of money you sell. Hold on, I wrote notes. The total amount of money you sell something for, or the amount of money you get paid for actually doing a certain job. So it's an item or your time and your expertise in being able to do something. This is the gross amount before they take out the taxes and the cost, and there may be supplies or whatever it is, the cost to produce that product, and otherwise your time. So that's the gross income before taxes and before your cost to produce. Just in case someone asks, you'll know what that is. Okay, and the last one is equity, is the percentage ownership you have in something. For example, a car costs $50,000. You have $25,000 and you borrow $25,000 from the bank. So your equity is 50% ownership of the car. That's sort of true, but if you owe any money to the bank wins. So even if you own 50%, you can't cut the car in half and declare, okay, bank, you get this half of the car, I get that half of the car. So you have to be careful. But those are the basic terms when you go to get loans from the bank. If there's any other terms that seem very complex, give me an idea down below what you need to know about. I'm pretty good at describing things simply. I know this was fast, but I think it's good basic conversation to start out and for me to find out how much you as my viewership know or want to know about basic terminology for finance professionals, but it's not professionals. We as citizens who are building our wealth to become independently wealthy, we need to know these basic terms. All right, big hugs. Thanks for coming. I hope everything's going great in your life, and I hope you come back. Subscribe if you can. Thanks. Bye.